Global stock markets have fallen again as Donald Trump's sweeping tariffs took effect overnight. In the latest sign that a trade war is in full swing, the US enacted a 104% tariff on Chinese imports. In response, shares in countries like Japan, South Korea and Hong Kong all fell overnight, whilst markets in Europe and the UK have also fallen this morning. Despite that, Donald Trump insisted last night that his plan was best for America.
And I do think that the war with the world, which is not a war at all, because they're all coming here. Japan is coming here as we speak. They're in a plane flying, lots of them, all tough negotiators. Right now, China's paying a 104% tariff. Think of it, 104%. Now, it sounds ridiculous, but they charged us for many items 100%, 125%. Many countries have. They've ripped us off left and right. But now it's our turn to do the ripping.
I'm now joined by our political correspondent, Shehab from Westminster. Shehab, how's it been today compared to the last few days?
Very, very similar. Donald Trump and these global tariffs are resulting in stock markets crashing all over the world. Trillions of dollars of value have been wiped out. There are fears of a global recession as businesses all over the world are hit. And ultimately, if that were to happen, it would be normal and average people that pay the price of this. Looking at the markets today, the FTSE 100, when I last looked, was down by a couple of percent. European markets are down overnight. Asian markets were down as well. This is something that's been going on for quite some time, and almost with every round of retaliation, every time there is a new announcement of tariffs coming in from the US administration, again, markets react quite badly. Ultimately, this goes against what we've had as the normal way the world has worked, the way global trade has worked for decades and decades. So markets are not reacting particularly well. There's a number of reasons for that. Not only does it go against what we've done for so many years, but also there's so much uncertainty around how long this will last for, what the solution is, and whether or not countries will continue to retaliate against one another.
Shehab, you've already mentioned that the FTSE opened down today, and I imagine many people are going to be wondering, how is this going to affect the UK?
Look, it's interesting to see the way different countries are responding to this. Keir Starmer at the moment is choosing not to retaliate. Whenever there's any sort of question asked to any minister, the answer is very similar. They all say the same thing. They say trade wars are not good for anyone. And we think the best thing to do here is to get a trade deal as soon as possible. We heard overnight from the US Trade Secretary, in which he said, I think upwards of 40 or 50 countries had reached out in the last few days to try and do a trade deal as different nations try and mitigate the impact of all of this. That's going to take time. It is not easy to do a trade deal overnight, which is what the big challenge here is. It's not clear who's at the front of the queue. The UK suggests that it's in its advanced stages of these negotiations, but they can take quite some time. In the meantime, while these negotiations are going on, the impacts are absolutely phenomenal. If you look at the prices of US Treasuries, there's been a huge sell-off in the last few days. US Treasuries, for a very long period of time, they are US government bonds, were viewed as some of the safest financial instruments. If you wanted to invest in something safe, you held on to US Treasuries. The fact they're being sold at the level they are suggests that investors and institutions and hedge funds are concerned. What's interesting here is a lot of these institutions are choosing to hold cash. And when they choose to hold cash, it suggests they do not know what's coming. And volatility is never good in markets. The other big thing that we need to keep an eye on here is what happens to interest rates. At the moment, there is a lot of pressure now on central banks, not just in the UK, in the Bank of England, but also in the Federal Reserve, to cut rates. And the reason for that is because economic growth has already been slow. Tariffs will hit economic growth. On top of that, in the United States in particular, tariffs are an inflationary measure. It will mean the cost of things will go up. And as that happens, there is always pressure on central banks to move interest rates to deal with changes to inflation. Now, in the United Kingdom, there's been a lot of talk here about the Bank of England stepping in and providing some interest rate cuts. Market forecasts have now shifted quite significantly as well in the last few weeks, from before those tariffs came in to now, and the market is expecting more interest rate cuts to come in. That's the sort of slither of good news we get from all of this, is that it may make mortgages slightly cheaper if you're on a variable rate mortgage. But it's an interesting dynamic as there are so many different things that are changing so quickly at the moment purely because of these tariffs that are being introduced.
And Shehab, we have to talk about the language that the US president used. It is unsurprisingly and typically inflammatory. Him talking about the worst offenders. What does he mean by that, and who is he talking about there?
The number one target there is, of course, China. They are the two biggest economic powerhouses in the world. For a very long time, Donald Trump has made it clear that he does not think the two countries are trading on even terms. And it's been interesting to see how this has played out. Initially, the US put in a 10% tariff on China. They then doubled it to 20%. It then went up by 34%, up to 54%. A 54% tariff, by the way, is very, very big. China then retaliated. China then put in a 34% tariff in response. So we started to get this tit for tat. The Chinese state has come out and said they are willing to fight to the bitter end on this. They've described Donald Trump as a bully. They're not willing to back down. Trump then turns around and says, look, you need to withdraw that 34% retaliation, otherwise I'm going to up it to 104%. China saying no. He's now introduced 104%. We are seeing this tit for tat of these two global powerhouses, both of whom won't want to lose face. So it's not clear yet where this goes. China now hasn't responded to the 104% tariff. We'll have to wait and see what they do. The thing that is really worth looking at here, and this is me being speculative, and I just want to clarify that this is purely speculation, but the thing to look at is the Chinese currency. The Chinese currency generally is pegged to a range of different other currencies. It's maintained so it is cheaper, so that Chinese exports stay cheaper. There will now be questions, I think, raised over the next few days or weeks to see if China manipulates its currency further. Does it look to weaken its currency so that its exports stay cheaper? Because at the moment now, if you were to buy a Chinese product in the US, you're going to pay a 104% charge. So, for example, a product that cost $10 last month will now cost you about $20, $21. So it's a big difference. If China is then able to reduce the value of its currency, they could potentially export their way out of trouble here. If they were to do that, I would be willing to bet very good money Donald Trump will not be happy. He has always been very critical of the Chinese manipulating their currency. I think potentially that's what the Chinese will try and do here, and it will only make the trade war get even more bitter.
And finally, Shehab, talking about retaliation from a global powerhouse, let's talk about the European Union. They did want to retaliate with tariffs of their own. They wanted to see how talks progressed with the United States to see if they've backed down or not. What's the latest there?
Yeah, again, speculation that Europe is on the verge of introducing retaliatory tariffs. They've also been very clear that they are willing to engage with the United States, have conversation, but over and over again, they have said they are not taking retaliation off the table when it comes to one of their responses. Again, you only need to look at what Donald Trump has been saying about the European Union for quite some time. He's been very critical of the EU as a trading bloc. He, again, does not think they trade fairly. If the European Union were to retaliate, and at the moment it appears that they are definitely considering it and it could happen very soon, again, you would expect the US to turn around and, like we've seen with China, put another tariff on the EU on top of that. Again, that will make markets react badly. Trade wars do not go well for anyone, and with every single development, markets have been reacting badly. And ultimately, that impacts businesses around the world. And at that moment, businesses start making different decisions because they are losing value. They are losing a lot of money very, very quickly. They then make different decisions when it comes to jobs, and that impacts people. So the fears of a global recession right now are stronger than they have been for quite some time.
That was our political correspondent, Shehab Khan from Westminster. Shehab, thank you.